the first half results for 2013 started coming out, and what we see is not strikingly different from 2012. It is becoming more and more clear that manufacturers with more streamlined beauty focus are in better position to take advantage of the growth potentials in the market. And this is because they're able to dedicate more resources, at least in proportionate terms, to R&D to drive growth through product sophistication. Now let's look at companies individually. I've looked at L'Oreal, Procter & Gamble, Unilever, Beiersdorf, Colgate, and Estee Lauder, and I've tried to make it comparable by using fixed exchange rate from 2013 in US dollar values. In this group of companies, L'Oreal comes out at the top with 5% growth rate, whereas Procter & Gamble's performance was least favorable at negative 1%. This again drives home the fact that manufacturers with more exclusive beauty focus are able to do better. L'Oreal invests quite significantly in R&D, and in fact, the company has claimed to develop 130 molecules in the last 40 years. No wonder its launches are based on scientific claims and breakthrough product developments. On the other hand, Procter & Gamble is present in home care and beauty, and its resources are more diluted when it comes to investing in R&D. At the same time, it is competing with L'Oreal in the category of skincare, and it's not able to match the same level of scientific development as L'Oreal has been doing. So we see the results where L'Oreal is performing well and Procter & Gamble is not performing as well as expected. Now one can bring up the issue of Unilever. It has cross-industry presence, but it's still doing well. Now, Unilever is slightly different to Procter & Gamble because Unilever specializes in commodities such as bath and shower, deodorant, and oral care. Traditionally, these categories have not so much been reliant on product sophistication to drive growth. However, going forward, this may change because companies such as Beiersdorf and Colgate are targeting commodities categories to drive growth through product sophistication. Unilever's model has been to consolidate its global operations and use that to roll out its existing brands to new markets and fill the gap in the pricing spectrum. But now, with competitive threats from Beiersdorf and Colgate, it may need to increase its investment in R&D to increase its claim of scientific developments. The outlook for 2013 full year is less optimistic than that of 2012, and that is because emerging markets are slowing down and Western markets continue to be volatile. In the face of growing macroeconomic challenges, it's all the more important to drive growth through product sophistication. This means manufacturers will have to invest in R&D and try and develop new ingredients with new claims. So streamlined beauty focus is not something that has helped to drive growth in the past, but will also become more and more prominent going forward.